performer here, but below the actual industrial sector. One thing I note is actually quite tightly correlated to the S&P right now, so perhaps look for breakdowns in that relationship for potential trading clues. The aerospace and defense sector, always a critically important sector to follow, kind of showing rather wide dispersion, but similar trajectory in the shorter term for many of these companies here. Boeing kind of near the bottom. But when we do look specifically at Boeing's chart, downward sloping channel type shape here between our two white dashed lines. We had our highs here, 254.35. We failed to overtake them after a brief decline following earnings. Now we have found ourselves in a situation where we have, for now, seeming to have solidified near the 190 level that represents an old gap from back in November here. So an interesting situation here, a big bounce yesterday, but it did fail to take us beyond that channel. So this morning's price activity should actually push us above that level here. The next place to watch could be this more recent gap near 206, then perhaps these relative highs near 217. So if we were to look at our moving averages that we follow here, yesterday's move brought us above our weekly 5-day EMA in dark blue. It sits near about 195 as of yesterday. We can also see that RSI showed a bit of bullish divergence here. It was in the oversold area, but it made a higher low while price was making a lower low. So that can be a sign of steam building up in the name. Sure enough, now RSI is breaking above this downward sloping red trend line here. So interesting food for thought as this shortened trading week continues here. Our volume profile study shows heavy volume here near this level between about 197 to 207. That would be a range to work through. We have our point of control up here near 215. Another pocket of volume down here near about 185.
All right, so like we've seen the overall market dispersion is starting to come down, so that correlation building up isn't extremely surprising. But walk us through sort of the setup here, options-wise. I think you got an example trade for us as well.
So I was looking at the April 17th monthly expiration for our example trade, about 16 days out here, this orange box here that would give us a range of about minus 6.7% here. So the lower end of that range lines up with a notable supportive level in our gap and roughly around our prior lows. So perhaps a short put vertical, a neutral to bullish trade here, -1 April 17th, 190, 185 put vertical at a $1 credit here, $100 max profit, $400 max loss in this risk-defined trade here. 1 to 4 risk-reward ratio roughly here. The break-even, 189, lines up pretty closely here with the expected move in this case. 6.7% plus or minus expected move, as I said. Break-even 6.9% to the downside here. So this trade would be kind of banking on the strength in this name kind of continues, this bounce continuing. A rather shorter-term trade here, only 16 days out, as we said.
Yeah, about 5% in cushion, 4 to 1 risk reward. First thing you should see when you see that is potentially high probability of success. So thanks to Rick Ducat for the trade, for the technicals on Boeing. He, of course, a lead market technician here for the Schwab Network. That's going to do it for us here on Morning Movers as well. I'm Alex Coffey. We've got the opening bell with Nicole Petalides coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the bell. We've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Strokes are
Jim's
actually
my
crazy.
financial consultant. I probably met 20 years ago.
Jim's really been
Strokes
there
are
to answer
crazy.
any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Oh no. What are we trading today? Well, let's study first. That'll be a segment actually from now on, I think. We'll do studying and then we'll do finance with Reezuhn app development. I believe, shit, that'll be cool. Add some value to the channel.
Both Brent crude and West
Yeah.
Texas are pulling back. We'll have the president's address
Can
tonight
set
to
that
the
up.
nation at 9 p.m.
Studying
Eastern
obviously
time.
is more
Obviously,
important.
the
And I'm
president
tired
and the
of stuff,
administration
but
really hoping to
if we have the
end
energy,
this more quickly. They don't want
why
it to
not
drag out.
give you a little sneak
Also,
peek
we'll
of shit?
discuss and dissect the
Yeah.
retail sales data, ADP jobs data, and the CFO of Reezuhn will join us. And that'll be live here at the desk, completing its spinoff from Aptiv and begins trading this morning. So here are the up arrows we're seeing. Don't forget, yesterday we saw the Dow above 1,100 points. This is a new month, a new trading day, a new month,
Yeah,
new
new
quarter.
month,
April
we're in
Fools,
there.
don't be fooled.
It's the first
And,
of the
so
month.
yesterday
Wake
we
up,
really
wake
ended on
up.
a high note on what was indices that we had seen
It's
that
the
were in
first of the
correction territory,
month.
and what a different picture it has been in the last 48 hours, and it continues to be so as there's optimism around the Iran war ending, possibly. S&P futures up 26 points, 65.97 is the level there. NASDAQ futures up 0.6%, and the Dow futures up 183 points, and the Russell, which managed to squeeze out a gain for the first quarter. Maybe you weren't looking, but that actually did okay. And here we are with oil and gold. Gold right now is up $70 at $47.48 a troy ounce, and West Texas oil right now at $100 a barrel, down slightly. A U.S. dollar 99.28, and Bitcoin 68,565. And Kathy Wood of ARC was just talking about the real potential going forward, that maybe the bottom had been in or the trough had been in, and sees upside. And the VIX 25.17, that's behaving, right? Not at 30. It's down 1/3 of 1% today. Kevin Hanks, live at the CBOE, is with us, pre-bell playbook, to talk about some of the action as we start a new month, April, new quarter, second quarter is
I
here.
couldn't
And
wait
there's
for this new
optimism
month
around the
too. I've been waiting
Iran
for.
war
I
ending,
got a
and we
couple
continue to hear
accounts
some language
for
to that.
stuff that
So that has brought optimism yesterday.
man, they
and
give you
today,
monthly
does that
caps
continue?
and
What do you
stuff,
think?
and
And when you see these up
God,
arrows
it's been
here
a
this
long
morning,
couple of weeks.
nobody knows exactly.
Good morning,
Went,
Nicole. Yeah, there's so
met
much
my
to talk
limits
about. It's hard to
halfway
get
through
it
the
all
month.
into
Wow.
a small segment. But breaking news right now: President Trump just said
that the Iran president asked for a ceasefire, but President Trump says the Strait of Hormuz has to open first. Those are his quotes right
fuck
now.
all
Now,
that
in terms
noise.
of the
Yeah,
overall
you got my
market,
people in a
markets
war.
are moving higher
Getting
again this
mad
morning.
at me.
They're off their highs pre-market, but look at the
Got
foreign
me over
markets
in this
rallied
bitch fighting, y'all.
gigantically off yesterday's U.S. stock
I'm gonna
market.
open up
So
that
we've
straight,
got
I
that
swear.
going on.
Being
We've got
gay.
big moves in yields. We've got moves of crude oil. Crude oil is now sitting right at just slightly over $100, but it was below $99 just about an hour ago. So the futures, the markets are moving all over. We've got a bunch of economic data out this morning. I would call it mixed. Mortgage apps was terrible based on based on the 30-year mortgages higher, but ADP was a good solid number, 62,000 private payroll. So good numbers there. Retail sales better than expected. Now that's a February, a late number, but still a good solid number out of retail sales. So we're getting all this information coming at us, and the market is consuming and digesting it as we get it. So as of right now, we're up about 1/3% on the E-minis, up about 0.6% on the NASDAQ to start the day. Gold, which was up over $100 about an hour ago, is still up 73. Markets are moving, Nicole, for sure.
You know, yesterday we were getting unconfirmed reports from the Iran foreign minister, Aragachi. First name is
90.
Abbas. And I had taken, 2 weeks ago, they put out everybody that could possibly lead Iran. And both President Masoud Pezeshkian was there, and Iran's foreign minister Abbas Araghchi. And I'm not saying their names right, but the point is that the president seems amenable to everything. He talked about
Man, it's been a
ending the war.
minute
He's
since
been
we've seen
quoted
Edgar.
in saying that and working with the administration.
Electronic data gathering,
This
analysis,
Iran
and
foreign
retrieval.
minister is much tougher, and said they'll not accept a
We're gonna look that
ceasefire,
up
that
actually.
he's a lot
I'm
tougher
gonna look
language.
Edgar
So
up.
I do wonder if
Let's
there
look up
is
Edgar
some
real quick.
internal, dissent.
That's actually kind of an
between
interesting
the
little
leaders there. In the
little
meantime,
pull.
we'll take it because it does seem
Let's
like things
look
are going
up
in the right
Edgar.
direction. And don't forget, U.S. has the firepower if they
Uh-oh.
need it, right?
When you look at everything that's going on between the U.S. and Iran, we don't know what we can trust and what we can't trust.
This is the
But
first
it
time we've
looks
actually
like
ever done
the good
this.
news is if you take it all into account,
This is
the
U.S.
direction
Securities
is going
and
well, right?
yeah,
It looks like
SEC.
President Trump is going to adhere at least very closely
Damn, this is
to
pretty
his
cool.
4 to 6 weeks plan for Iran.
This is pretty cool.
I think he wants
Enjoy
to do
full
that.
public
I think
access to
Marco
millions
Rubio came out,
informational
yesterday
documents
and
filed
gave
by
a
publicly
very
traded companies
precise
and the
4
others
points of
in the
what they were looking
SEC's
for.
electronic
Destruction of
data
ballistic
gathering.
Missile capability, neutralizing their nuclear
And
ambitions,
retrieval system.
degrading the naval and
That's
air
pretty cool.
power, and protecting
So
U.S.
this is like where you get the
That's
official
for
fucking shit. This
specific
is like
intent for the
a
U.S.
step right
military activity. So
before
I think
inside trading.
everything is getting a little more clear.
That's pretty fucking
I
cool.
think the tensions on crude oil and other markets are starting
Edgar
to dissipate.
APIs.
It's not going to be a straight line, but certainly yesterday's stock market was a pretty strong rally, and let's see what happens today. The foreign markets, like I said,
having some
were up big
APIs
overnight.
hooked
The
up to
Nikkei
a
was up
finance
over
app would be
5%. So
fucking
these
sick.
markets are recovering the overall tensions, but we
Oh,
need
hold on.
headlines
We just might
on
have
the Strait of Hormuz, right?
studying
That's,
is gonna have to take a
the
break for a
next
second.
set of headlines to
Ooh.
watch for. We got some yesterday, but we need more of those to fuel this market going higher. We need
Application
all the
for
tensions to keep,
No,
as
this
they're
page
doing
provides
already,
information
coming
on
down,
how
Nicole.
developers may use
All right. So, and
application
when we
token
think about the
license to
prints that
access
we've
Edgar
gotten in, I mean,
submissions by
mortgage apps
companies
last week
and extract
were less than impressive. I saw like down 10%.
on
There
how
was nothing
filers
great
may
there.
use. Check
We have
over.
seen rates come down a bit in the past week or so. I know we've gone from 398 up to basically 445.
See
in
how
what,
do
3-4 weeks? So right now we're at
How do I
433
create and
on the
manage
10-year bond
filer
yield. Final
and
thought maybe on some of the
use
economic
that
prints
tokens?
at all?
We were talking
Overview of
before I left
Edgar's
about
APIs, man.
30-year mortgage rates being
This
below
is fucking
6.
cool.
Now they just moved from 6.43 to 6.57. That's why you're seeing basically a halt in mortgage apps and refinances. So that one part of the U.S. economy that is so sensitive to interest rates, that's suffering during this. but the numbers are starting to dissipate, so we'll watch for next week's applications. But this week's more horrible numbers, as the 30-year mortgage is now 6.57%. So that's problematic. That's one effect of everything that's happening. But like I said, if you're looking at the overall market in the big picture, the overall tensions and uncertainty are starting to come down, and you're seeing that show up in the stock market, Nicole.
All right. Well, you'll want to hear this next interview, Kevin Hinks. I know you're standing by, so thank you for that, Kevin Hinks. Thank you.
In real time.
Meanwhile, right here at the New York Stock Exchange, Reezuhn completes its spinoff from Aptiv today, begins trading here on the New York Stock Exchange, VGNT. Joining me right now, the company's Chief Financial Officer, Doug Osterman, the CFO, is sitting here with me now. Good morning.
Good morning, Nicole.
Welcome.
Thanks for having us.
You're going to be ringing the opening bell here today. A lot of excitement. And when people think about this company, they're thinking electrification, EVs, and global footprint, right? Tell us a little bit about the company.
Yeah, so what we do is we produce wiring harnesses that carry data, power, and signals throughout vehicles. And we have about a quarter of our business in Europe, a third of it is in APAC, most of that being China, and the rest is in the Americas. We do business with all 10 of the largest OEMs around the world. 90% of our business is with automotives, and about 10% is other adjacencies where really our engineering skills apply, and our production is able to handle things like battery storage, off-road vehicles, agricultural vehicles, and the like.
But when we think about the vehicles around the world, I saw it was 1 in 6.
Yes.
Is that right? I mean, you have over 138,000 employees,
that
more
was
than 30
cool.
countries. The 1 in 6 number, how do you like that? Do you expect that will go up in the years ahead?
Well, we continue to see growing levels of complexity in vehicles, and that's driven by increased feature content as well as the electrification trend. And so that's been a real positive for us, that increasing content per vehicle is basically expanding the TAM, but also expanding the complexity. And really, we have the engineering staffs and the proprietary tools to help the OEMs sort out that complexity in the vehicles, saving them weight, saving them copper content, and saving them cost. And that's really why these trends are really playing towards our favor.
And we think about your company, Reezuhn, how does it differ from other companies out there in the competition?
Really, the OEMs seek us out to handle the most complex vehicles. And because we have 8,000 engineers, 1,000 of them are actually sitting with our customers, helping them develop these electrical architectures within the vehicles. And that really differentiates us. We're the folks that they come to handle that complexity and really add value.
So what are some of the companies of names that we know that you work closely with when it comes to the automotive side of your business?
Yeah, we work with all 10 of the largest OEMs around the globe. So you know all of them, all the big names.
Those are all your partners.
Yeah.
What do they say about the economy? I want to talk about China, too, because I know you have a big footprint there.
We do.
What do they say about the economy overall in the next 12 months or so? Near term, long term, what do they say?
Well, I think near term, like everybody, we're all kind of watching the global political, geopolitical events, right? How they play out.
Right.
And of course, how those factors may play out throughout the economy and affect demand. But right now, I think people are cautiously optimistic.
So they are feeling pretty good for the most part. The push for electrification and EVs and all of that, did that stall for a while? Forget the Iran war. There was a time where GM and Ford and all of them they moved to a lot of hybrids. They had committees that were suggesting hybrids instead of just EVs. There was sort of this feeling that everybody who wanted an EV got one already. Is that not the case going forward? Why will folks want EVs in the next 5 or 10 years?
Well, I think when you look at the trend in EVs, it's very different depending on what region of the world you're looking at. So in China, EVs are very much still on track. We see also range extender products coming into the market pretty strong in China as well. When we look at Europe, we see growing levels of electrification as well. The United States, I would say the push is more in hybrids. So you see the introduction of a lot of the OEMs coming out with full hybrid electric
Why is that? Why do people in the U.S. want hybrids, whereas in Europe we're seeing more of a demand? Because in Europe they can drive so far. They can go from country to country to country, endlessly. Why in the U.S. are people pushing off EVs, do you think?
I think demand for EVs is affected by a number of different impacts in the market. So you've got, of course, government policy, which in some of these countries, for instance, China, has been very supportive, right? You have charging infrastructure and the development.
Sort of demanding it. I mean, let's call it what it is. They really are demanding that we have more EVs, right? And our government's not doing that.
Yeah, I think there's not as much support right now, that we see from the policy side. I think, those people who drive EVs, I think have a very good experience. I think over time it will grow, but there's a lot of different factors that impact the demand.
I do think the range extender is a really good one. I mean, there was a story about somebody who had an F-150 Lightning and was trying to drive across country and had frustrations. But, as more and more charging stations become available and the range extender, for example, I mean, I rented a Mercedes in the city, went out to Long Island to the Hamptons, came back, parked it back at the rental place, and my mom and I couldn't believe it. Like, we didn't have to do anything. I think it had nearly 300 miles or something. How many miles are we talking? Like, what's going to be a full tank?
Well, I think when you get to a range extender, of course, you have the option of having the ICE engine, the internal combustion engine, charge the battery within the vehicle. And so it gives you more optionality. You don't have to feel like you depend on the charging network for the full time. So I think that's quite attractive to customers.
Is 300 miles the norm? I'm sorry to interrupt you. Like how long you can drive? If you pick up the car and it's fully charged.
I think a lot of customers are looking for a 300 miles range as kind of like
this month is going to be so goddamn exciting.
I think, with a range extender, you can get much more than that, of course.
Oh, that's interesting. Right. So what are so now, I mean, now is the right time for the spinoff from Aptiv. Why? And what are some of the things on the immediate agenda?
Well, I think, Reezuhn has a lot of opportunity in front of it. The business generates a lot of cash. We expect to generate about $1 billion over the next 3 years. And we really have kind of now our opportunity to have our own capital allocation strategy, invest in the business for those organic growth opportunities, but also return a lot of capital to shareholders. So I think it's going to be a very, very exciting time.
Yeah, people will like that,
right? Definitely not
look for the ticker symbol here today, VGNT. Talk about the supply chain. How has that been? I know we've had some disruption abroad, but I mean, I know you've experienced way more when it came to supply chain, particularly during COVID, and we had a glut, and then we had nothing, and then we had an oversupply. How are you doing on point A to point B on the things you need? Where's most of your manufacturing done?
Yeah, what we've learned really is that the best model, and this is the model that we have in place everywhere in the world right now, is in region for region. And so we are sourcing within those regions.
Oh, but they don't know.
And to a big extent,
that
shields us then from a lot of the disruptions that you're talking about.
And what about inflation and labor? Those must be on your mind as the CFO. I know you're watching both of those costs on a regular basis.
Absolutely, and it's labor inflation is certainly something we keep an eye on, and we try to rotate our footprint a bit over time to take advantage of the most cost-effective areas of different countries. Of course, also commodity inflation, because we use a lot of copper, is also a big issue for us. So we're definitely focused on keeping costs low for our customers.
Well, this is day one, your debut, Reezuhn ringing the NYSE opening bell today, marking the first day of trading, spinning off from Aptiv. So for all the context and information and outlook, we appreciate it, and thank you so much, Doug Osterman, CFO of Reezuhn. Thank you.
Thank you so much.
Great to meet you. We'll watch for you on the opening bell and the team there. Congratulations. Thanks for being on with us. Coming up, we'll count you down to the opening bell. I'm ready. Are you?
15 minutes. She's a little ahead of it. I don't know. I think I'm kind of slow this morning. Current shows a key liquidity metric used to assess the company's ability to meet its short-term obligation goes through some from assets over liabilities. This one was hard for me. $10. It's in yen. Oh, this is hard. But yeah.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure,
It's gonna be
risk
negative
management, and a focus on execution.
4%.
From options to earnings to volatility plays, we bring
thank
decades
goodness.
of trading experience to every segment.
With
Treasury
real-time
bills are
insight
considered
across products
zero
and
coupon
sectors, we
securities
deliver what
because,
active traders need to stay ahead. Fast
so
Market
that
weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Commercial paper qualifies for exemption when it
I'm Alex.
I'm Jane.
is sold.
And I'm his mom.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles,
D just
including
sounds
growth,
like it, right?
value, income, and more. Best of all, you can ask questions by chatting directly with an education coach.
It's exempt when it has
interactive
a
learning
mature
at its finest. Tune in live or
some
on demand.
270 days.
Head over to
Interesting. Okay.
schwab.com/coaching
And a minimum.
and start learning today.
And it's not advertised.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Welcome back to Opening Bell. The way we ended last month, we're starting this month, end of the first quarter, starting the new quarter. Lots of up arrows to look at. This as the talk about ending the Iran war continues, and we will hear from President Trump this evening at 9 p.m. Eastern
When would you want to take
In the
advantage
meantime,
of
lots of stories we continue to follow. Sam Vardis is with me, telling me some of the things she's watching here this morning. Globally, I saw up arrows as well.
Yeah, it was a good,
like it's a good start.
That's
And the
right.
rates
Yes, strong
are
start
high,
to April and
right?
the second quarter here, particularly overnight in Asia. You had
Increase.
areas like South Korea, Japan, Taiwan ripping overnight. The Kospi putting on over 8% thanks to some of the
stock prices.
behemoths like your SK Hynixes and Samsung. We got some good export numbers out of that country as well. That's a very good barometer of what's going on in the AI chip space
Well,
as
at least
well.
for,
Japan had a business confidence
corporations,
survey out which looked helpful as well. So that was good. China had some interesting PMI data out last night. I think this is important to look at globally. That is because obviously everyone's been looking at the input prices, but also the output prices. So how much these manufacturers and these factories are actually passing on to these companies rather than picking up the tab. Both of them at a 4-year high. That will be important because if you manufacture in China, you're talking about higher prices. This has been a theme we have seen in about 15 minutes, Nicole, or just more than that, I should say. 9:45 Eastern, we'll be getting S&P Global Manufacturing, important to look at. I'm going to be looking at ISM Manufacturing, though, at the top of the hour for those cost pressures, if we're starting to see them coming through here in the US as well. That's going to be very telling for inflation. But yeah, Nicole, look, some decent data, you could say, out of the US this morning, particularly when you look at ADP and retail sales. What I think is interesting is a lot of this is obviously pre-war. So let's see. We've got those mortgage apps as well. So keep an eye on the home builders today, given, of course, we've got that 30-year mortgage rate now at, what is it, 657. So that's a 7-month high. So plenty of things to keep an eye on. From a technical standpoint, I'm going to be talking to Katie Stockton in my show a little bit later on, but just take a look at what happened yesterday. I mean, a rally on an unconfirmed report, Nicole, that was nothing new. We saw the VIX collapse off the back of that, and what traders have been talking about this morning is the massive chase and actual lack of positioning. If you take a look at the TIC index, which is the short-term sentiment indicator here at the New York Stock Exchange, which actually looks at the uptick versus the downtick of stocks. Some are saying this is the highest since '93. Some are saying the highest on record. So just keep an eye on that as far as the technicals are concerned, because we did bounce off these oversold levels, which makes sense. But of course, the big question is whether this has legs, particularly as President Trump is talking about in Truth Social today, the fact that they are actually going to consider when the Hormuz Strait is open as to whether to blast Iran to oblivion. It seems like we're back to Monday when this was part of the negotiating, or at least part of the calculus here, when yesterday the Wall Street Journal seemed to think that he could end the war without opening the Strait of Hormuz. So I think it's important to pay attention to the language here.
Yeah, and I also was having a conversation with Kevin Hanks that he's talking to the president, but there was also the foreign minister who was out speaking as well. So I do think there's some sort of, differences there within Iran, but we'll wait and see. I mean, the president, Masoud Pezeshkian, versus the Iran foreign minister, Abbas Araghchi, I do think there are some differences between some of the things that they're telling us. Some of it's not even confirmed. But most of all, we are hearing the theme, and the headlines seem to be end the war.
Yeah, 2 to 3 weeks. That's what the president said last night.
And UAE getting tough that they want to then support opening the Strait of Hormuz. I heard that they wanted to get in there and get tough, like the president said, build some courage. Let's talk about Nike with the down arrow and Tesla not doing some custom cars like they used to.
That's right. Let me just start with Nike, because it seems like the tone in the notes this morning, and there are a lot of analyst commentary here, Nicole, is that we're just not there. This timing of this turnaround is going to continue to obviously drag out here, given what we heard from Nike last night. I mean, good numbers, marginally higher as far as the beats here, but the China story remains a challenge. They did manage to narrow that revenue growth dip. That was the good news, but how sustainable is that is the big question. They've got a lot of competition over in China. This is a huge market. The consumer discretionary story has looked a little bit shaky over there as well, although a lot of my Chinese sources seem to think that that is turning a bit of a corner. So let's wait and see. But you've had a long list of analysts lowering their price targets this morning here. You've got a downgrade from Goldman Sachs as well. Let me just pluck out a couple of lines. I mean, they're talking about the folks over at Barclays being a big new message, being the depth and slow speed at the very deliberate China reset. It's going to take 4 quarters to return to growth. You've got JP Morgan saying the turnaround's taking time. You've got also Stifel saying that the firm is incrementally cautious on the timing and the magnitude of Nike's turnaround. So you've got a lot of firms like Goldman, as I mentioned, saying also incrementally cautious on the timeline of this recovery. Over and over again, you've seen words like incrementally cautious, and the timing of the turnaround and the magnitude is just not there at the moment. It is still going to take some time. So that's the Nike story. Why shares continue to remain lower here? What we're at 8-year lows just before this report, Nicole. I mean, the market is bearish on this name, not managing to turn things around. Also a little bit cautious on the outlook here, given some of the exogenous factors that it's dealing with. Look, it did see a little bit of margin improvement. I think that was good, but they don't have a huge amount of visibility right now. Not a lot of the retailers do. Obviously, that's why we've seen some more conservative outlooks coming into this year. Tesla Tesla. Let's switch gears. A lot of headlines floating around with Tesla. Obviously, this morning we've got its sales deliveries, which are going to be out tomorrow. So everyone's going to be looking at that, particularly as investors have been very much focused on the AI and robotics side of the business more than the cars. But then it's been interesting, hasn't it, Nicole? Because you do have Canaccord, which was out with this note yesterday, which thinks that it's still going to deliver more cars and is putting the emphasis still on the vehicles rather than the robotics for why it's still got a buy rating, saying sales are still very much important and they matter. China is sluggish, and this was my favorite part of their note yesterday. US and Europe improving, but meh. Now, they did also highlight some of the depressed multiples across the Mag 7 as to why they lowered the price target here, but they do say that robotics and autonomous is going to be the story moving forward. But you've also had Elon Musk taking to X, his platform, saying that they're going to stop production of the Model S and X as they do focus now. They need to shift some of that mental capital to Optimus as well. So that's a headline we're tracking. But even though a lot of the focus has switched from the cars to the AI and the tech side, Nicole, you still have a headline out this morning talking about new registrations over in France, tripling, which is shy of a 2-year-old record high. So maybe they are starting to see a little bit of improvement here in a market which Canaccord calls a bit meh, but still, I think that's good news, particularly in Sweden, Denmark, Spain, and the Netherlands, when you've had so much Chinese competition in that part of the world as well.
All right, well, let's get to Apple, which is celebrating a birthday. I remember my first Apple computer.
Oh, don't we all?
The iPhone 17 is still hot.
Yes.
Agentic AI is hot.
Yeah.
Some Apple stories.
Happy birthday, Apple. So we've got this report out from Bloomberg, which is talking about the big fat elephant in the room right now, and that is what is going on with AI with this company, because the market can be credited with being very patient, I think, Nicole, waiting so much, so long for them to come out with this narrative and something that's convincing. I know Dan Ives has been talking about it a lot, and he points to WWDC being obviously the big focus, particularly for Siri AI. But as I mentioned, Bloomberg out with this yarn today saying that it's testing a new feature that would let Siri process multiple requests in a single query. So that would be breaking new ground, according to them. And this could move Siri closer to the abilities of like a newer artificial intelligence assistant, which is all the big rage at the moment. So keeping an eye on that as we approach the middle of the year WWDC.
All right, happy 50th to Apple, which is looking slightly higher today, has a win over 1 year. Sambatis, thank you. Opening bell right now with Precision.
Discount model. That's for today.
And there's CFO Doug Osterman, who we just had on a moment ago.
Divided by 11 minus 5.
Ringing the bell here on the floor of the New York Stock Exchange, spinning off from Aptiv. And you do have stocks higher here. The Dow Jones Industrial Average up 323 points, 46,660. The S&P 500 up more than 0.5%, 65.60. Oh boy, 65.66. A nice move there in just a couple of days, right? You're getting used to some up arrows, trying to forget the 5 weeks of selling. Will this be our first up week after 5 down weeks? We've also seen Apple here now. It's up 0.2%. I like looking at Apple because really, you know, if you had invested in this one when it went public, you'd be super rich. In the meantime, this was a garage startup and ended up being a $3.73 trillion giant. There's Apple right now. So an incredible, incredible move there for, you know, they said if you had $1,000 in the IPO in 1980, it would be worth over about $2.5 million today. Did you buy that in 1980? George Silas? I don't know. I'm happy George Silas is with us, but I mean, obviously we've got to give recognition. A garage startup to a $3.7 trillion company, and if you bought this in 1980 at $22 a share, you'd have $2.5 million. Pretty amazing, and I know you're looking today
divided by
at
11 minus 5.
Restoration Hardware, RH is what it's called, and it has down now. Tough times.
Yeah, this is a tough one, Nicole. I mean, they've had a really bad year. I mean, if you look at the price action since the tariffs began early last year in 2025, so it's been about 15 months of decline. So restoration, they posted some declines in terms of the EPS numbers relative to estimates. $1.53. So that number was actually down about 3% compared to the same quarter last year where they published $1.58, but the estimates were $2.21. So they missed the estimates by about 67 cents. And then sales, which were slightly higher at 843 million, did miss the estimates, which were 873 million. But overall, they gave some cautious outlook. So I can see why the stock is down just because of the misses, but also the outlook in terms of sales. Now their outlook is between 4 and 8% growth for the fiscal year. Still positive, but again, they widen out the lower bound of that range relative to close to 9% or 8.8% previous estimates. So 790 midpoint versus now 880. That's more of a 10% decline in revenue estimates, if you will, for next quarter. And essentially, I think what's happening here is there's sort of a luxury recession going on with restoration. They are moving their estates gallery quite aggressively. That's really a premium area of their furniture and lifestyle ecosystem. Expansion in Europe has been pretty aggressive. So they're spending quite a bit of money at a time where there's a difficult housing market, as well as the fact that tariffs have really impacted their operating income. And they've talked about this clearly over the past year or so. And if you look at the chart too, right now it's trading quite a bit below what had been a area of support around $132. So short interest is really high at 35%. This might be a washout quarter for restoration, considering again, sir, there might be some relief in energy prices, also with aspects of inflation because of the war in Iran.
Understood. I mean, I know the president said we'll be leaving soon and they don't have to make a deal, but it certainly caused a lot of turmoil and volatility in all the markets. Bank stocks, I mean, as we come up to April, as earnings season, we think about these bank stocks. You're seeing some upgrades today. Some of your thoughts?
Well, yeah, I think if you look at the bank stocks, they've really gone through a multi-year multiple expansion, and that's really benefited, many of the first tier or commercial banks like Bank of America, Wells, and such. They've been pulling back, I suggest, because of potential inflation, but also the pressure of lowering interest rates. But if you look at HSBC Bank, they actually reevaluated a couple of names, including Wells Fargo and Bank of America. They essentially moved Wells Fargo from a hold rating to a buy rating, but they reduced their price target to 94 from 104. And at the same time, they did the same thing for Bank of America, reducing their price target to 55 from 57. Both these names are down year to date about 11 to 14%, but they're looking at repricing essentially, the risks associated with what's going on with inflation impacting consumers. And then, of course, the renewed credit risk associated with both private credit as well as maybe now consumer credit, because inflation is really cutting into household budgets going forward. But they're looking at the realignment of the earnings multiple more in line with 5-year averages, which right now, if you look at the forward earnings multiple for both these names, around 11.5 times earnings. And that's right in line with what they have been in the past 5 years. So I think they're adjusting it slightly lower their price targets now, based on some margin of safety associated with additional credit risk, but also macroeconomic headwinds.
All right. Last but not least, we have to talk about Disney getting an upgrade today. Can we take a look at that, George?
Yeah, so this is interesting because, Disney's gone through a multi-year decline.
This is okay. I didn't even understand that question at
5 years, the stock is
That's
down about
the
50%.
transferring of a client.
They have essentially been reorganizing their business, focusing more on streaming. But at the same time, they're also declaring a pretty significant increase in CapEx to their theme park division. So they're no longer in the business of cost cutting. They're really in the business of growing the business again, relative to what they've done in the past few years, reorganizing their streaming businesses, Hulu, and of course Disney Plus. And that's going to be accretive to margins. And I think this is why Raymond James has basically up their rating on the stock to outperform from market perform with a $115 price target. They're looking at the stock as historically cheap, as well as the fact that the business valuation is more in line considering the operating income estimates, which are growing in their streaming business. So they're looking at the cost cutting being done, but now valuation in terms of risk reward looks compelling.
All right. Well, George Sillis, it's great to see you. Thank you so much. Good look at some key names and segments to watch, right, including those banks in the sector.
What a weird way to say you're good.
We will discuss the American reindustrialization and how one ETF plays that theme very carefully. You'll want to hear more about it. Opening bell. We'll be right back. The Dow's up 300 points.
What's that one? I remember 61-day window. A fund may call itself no load if its 12B1 fees exceed 0.25. What they okay, whatever. Hopefully I never see that again.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
These strips are like inflation hedging.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Welcome back to Opening Bell. Up arrows here on Wall Street. You hear the bell ringing. Versigent underway. We had the CFO earlier. Now it's time for the very latest from this floor. Joining me here, Sam Clark, Portfolio Manager, GMO, Domestic Resilience ETF. And the ticker symbol is DRES. All right, welcome. Good to see you, Sam.
Thanks
Glad you're here.
Low
So,
interest
how's it been?
rate
What are some of the trends that we're seeing in this now?
So the big thing that we're focused on these days is American reindustrialization. With everything that's going on in the world, I think the common element is the U.S. needs to reindustrialize, and the portfolio that we've put together, I think, really takes advantage of that. So it's been a very interesting year from a markets perspective, but a very profitable year for us.
Yeah, and I saw some of the key names in there, Vulcan Materials, Northrop Grumman, Union Pacific. Tell me about Clean Harbors. Tell me about some of the names that would fit the goal of this ETF.
Yeah, so when we think about the types of businesses that we think will benefit from American reindustrialization, we really think about it in terms of a picks and shovels analogy, right? So rather than picking the exact location that a new factory is going to go in or something like that, we really want the companies that are going to benefit regardless. So you mentioned Vulcan Materials, Martin Marietta. These are aggregates companies. They supply the rock, the crushed stone that you literally need to build anything in America. And so regardless of whether the production takes place in one town or another, Vulcan and Martin are going to be companies that benefit from that. And these are really kind of the common themes across the companies that we own.
So how long has this been out? I mean, roughly.
We launched October 1st.
Yeah. So how have you seen the demand
Demand's been really interesting. I think we're at the beginning of people starting to recognize that the last decade in the markets, where everything was dominated by big technology companies, these kind of asset-light models, it's really starting to shift towards these more asset-heavy business models, and we're kind of right in the sweet spot for that. So we've had a lot of interest.
And when we talk about the top holdings and how often this is updated, how often are you doing that?
We rebalance episodically, right? So we're not on a calendar. What we really want to do is take advantage of market opportunities. So when the market was particularly volatile in February and then again in March, we really kind of took that opportunity to rebalance away from some of the names that had done really well and into some of the names that we thought had a lot more potential. So it's really much more based on what we're seeing in the market rather than on a set schedule.
I mean, being actively managed, you find that to be way more profitable.
It's a huge advantage. Yeah, so as I think about it, a lot of people, the way they approach an ETF might be to own a little bit of everything. I call it the Noah's Ark approach to investing, right? Our approach is much more focused because we know our names. It's essentially a fundamental stock picking strategy. And so as a result of owning our names and knowing them really well, we can kind of dial in the portfolio a little bit more. We're a little bit more concentrated. We have about 35 to 40 names compared to some of these other strategies that might have a lot more.
Yeah, up over 10% since the launch. Since you said October 1st, it's up 11%. When we think about what goes on geopolitically and we look abroad, it just shows for more need to be done here at home. Is that right?
I think you're absolutely right. All the things that we're seeing in the world right now really all point back to the same place, which is America's need to reindustrialize and become more reliant, more resilient in its economy and kind of the way we manufacture things. A lot of the trends that we've seen over the last several decades have been towards offshoring, pushing all of this away. What we're starting to reckon with now is the idea that bringing a lot of this back onshore makes sense both from a business perspective, but also from a security perspective.
Is there any sort of big competition that you have like this? I mean, are there a lot of sort of, build it ETFs type of thing?
We're starting to see some. Again, I think the big differentiation that we have coming from a firm like GMO is we have a long history with two really important concepts: quality and value, right? So from a quality perspective, we want to make sure that the businesses that we own are resilient through an economic cycle. And from a value perspective, we want to make sure that we're not paying too much for the businesses that we own. The result is actually pretty interesting. We have a portfolio that we think is absolutely dialed into American reindustrialization, but trades at a significant valuation discount to the broader equity market. So you're kind of able to have your cake and eat it too.
Understood. I mean, when we think about the market overall, what kind of, I know you can't time the market. You said you rebalance it episodically, which I think was a great word. How are you feeling overall? I mean, you're seeing the market turning a bit this week. I don't know whether or not you believe it or not. I mean, the president working to try to end the Iran war, it seems. How do you feel about the market, near term, long term?
Near term, it's obviously been really volatile, as you noted. One of the really interesting dynamics for our strategy is we had a really great January and February, as a lot of the industrial names really ran up a lot. We're starting to see some economic green shoots in the industrial economy, which is really encouraging. March was, we saw a drawback, as you said, in the broader market, but some of the names that we hold in our strategy include energy and defense names, and those have been kind of a really effective ballast during this period of market volatility. So, as you noted, in a period where the market's down, 4 or 5% year to date, we're up pretty nicely. And again, I think it kind of underscores the resilience of our strategy.
Think you'll hold those energy and defense names for a little while?
Yeah, we don't come in with the prior that we need to own them forever or that we need to sell them tomorrow. It's really all about value. And so one of the things that we're following really closely as some of these stocks go up a lot is, okay, how much of this is just kind of a change in perception and how much is a change in fundamentals? Being an active manager allows us to kind of track that real time, where we can say, hey, the war in Iran, for example, is very good for defense companies and defense spending over the long term. So we can adjust our valuation to take that into account.
When I think about a name like Union Pacific and the railroads, I mean, that was Warren Buffett's favorite. You keep those railroads in there. I mean, AI can't replace railroads so fast.
Yeah, you're exactly right. They're amazing businesses. And the cool thing about Union Pacific is that there's a stock-specific catalyst as well. Again, we're fundamental managers. We care about these sorts of things. So Union Pacific is in the process of buying Norfolk Southern, which is another major American railway. Putting those together, Union Pacific in the western part of the U.S., Norfolk Southern in the east, we think would represent a real competitive advantage for this company going forward. Going to make a strong business even stronger.
Yeah, it's great to see you. Thank you so much, Sam Clark, portfolio manager, GMO Domestic Resilience ETF. Thank you, Sam Clark. Great to see you, and you can check out the ETF as well. Coming up, we'll look at the key levels to watch here on Wall Street. Could we be snapping after 5 weeks of selling? Could we have our first winning week here in this new first month? First day of the new month in the second quarter. We're kicking it off with some up arrows, folks. We'll be right back.
While others recap the news, I help you read between the lines. from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
All right, check it out. Up arrows here on Wall Street. Do you like them? I don't know if it's an April Fool's Day thing or not. Rick Ducat maybe can tell us a little better. He's our lead market technician, and looking at some of the up arrows we have after yesterday's gain, gaining even more here today. And I was looking to see if we could, there it is, 65.58. These were some key levels, right? That 65.50, I remember being a real key technical level. What key technical levels are you watching, Rick?
Yes, a more positive start to today's trading for the bullish crowd here. A quick look at our major equity index ETFs shows the SPY up about 16.4% during the past year. A similar trajectory for all of them. They've seen a sharp bounce in the past few sessions here. To look more specifically at the SPY, we can see that for the most part, we've had a downward sloping channel type shape ever since we broke beyond our blue upward sloping trend line that saw some moderation and sideways grind, topping out near 698 or so. Today's move could potentially take us out of this channel that we have established here and also above a former supportive area. You can see here repeatedly tested frequent lows near about 653 or so. That would be a noteworthy confluence point that we have here because it's the intersection of not only our trend line but also our prior supportive area. If we were to keep moving to the downside, 635 stands out, another repeated low point there. If we were to move beyond this potential breakout point, 673, old highs, subsequent lows, and then another high after a brief gap down that we saw. So that could be an upside area that the bulls could have their eyes on. When we do look at our moving averages that we follow, we have a notable situation here. Our short-term 5-day EMA, our long-term 250 one-day EMA in dark blue and orange respectively, both are right on top of each other near about 647, 648. So this gives us another notable confluence point to the supportive side to be on the lookout for. Meanwhile, our teal 21-day EMA right around 659. So that could be another boundary to keep an eye on here. RSI improving. We have moved out of the oversold area, that threshold of 30, but a very longer term downward grind still in play, our red trend line, pretty close to our 50 midline here. So a push above that area would also be noteworthy, especially if it coincides with price pushing above some of its relative highs that we previously saw. When we do look at our volume profile study, there's a pocket of heavy trading activity right about here, 640 to 647 or so is the standout area. Things really start to drop off after 620. To the upside, though, we have a notable spike right around 660 to 670 or so. So that could be a potential consolidation area to watch out for. Meanwhile, 680, our point of control, still stands out as this very heavy trading area at these old highs that would need to be broken through in order to resume some kind of uptrend. Notice as well a heavy volume that we've seen recently here, especially yesterday, a volume spike, volume 50% above our 50-day simple moving average of volume. Expected move, our projection based on the options market here, April 17th, the monthly expiration here, our orange box comes in about plus or minus 4.2% over the next 16 days or so. So some food for thought.
All right. Thank you, Rick Ducat. Appreciate it. Plenty of food for thought there. And we continue our conversation about the market. Alex Coffey is with us, looking at some of the action we've been seeing. Should we start with the VIX right now at 25.16? That's a far cry than above 30, which it was not that long ago.
Yeah, no doubt, Nicole. Things have certainly improved on the volatility front, kind of confirming some of the recovery of yesterday's equity price action, and also some of the rhetoric working towards a resolution, not there yet, but seemingly attempting to work their way there. Some of the things I look at are some ratios within the volatility world. For example, the VIX curve, so comparing a shorter dated VIX to a longer dated VIX. Some would use maybe a 30-day, 90-day. That's pretty flat at the moment, which indicates there is still uncertainty, but we're not inverted, so we're not seeing that kind of crescendo moment of fear in the near term, suggesting that we may not be completely out of the woods just yet. I like to also compare volatility to volatility on itself. And when you start to see that relationship compress, getting maybe sub 4 in the 3.5 range between VIX and VVIX, it can sometimes indicate oversold conditions. We didn't quite get there, but we did get to a low in that of around 4.25. So it did get to a pretty stretched area. All that to be said, Nicole, we're only down about 4%, and we have seen a pretty substantial repricing within some of the more concentrated areas of the market. So we didn't think that deconcentration, if it were to happen, a broadening of the equity market would be without some pain. But to only see a 4% drawdown in real time here of the S&P 500 from its closing high, and you see the pretty dramatic repricing in semiconductor stocks and some of these AI names and Mag 7 names, all in all, I'd say that was a win for investors.
Look, we've had many of the banks come on and guests come on and see 7,000 plus for a year end. I mean, right now we're down 4% year to date on the S&P 500. We are out of correction territory for those major averages that had gone into correction territory. So we will see. I mean, 4% is 4%, and a few good days, and you can grab that pretty quickly. That being said, I'd also like to know that we have industrials, communications, materials, tech, utilities, healthcare, all with up arrows. It's energy that's lower, and you have the West Texas 98. I mean, can you believe it? I have to check Brent crude, and then I'm going to hand it over to you because there's only a little bit left in the show. So Brent is at 100. I mean, Brent's almost a little more. It's going to be under 100 itself. How about, as you're looking at this oil, the latest on Iran, and we'll hear from the president tonight.
Yeah, and we pumped through about 45.
Yeah, so we got the post on social media from the president basically saying, hey, we'll be looking to do a ceasefire if the straits reopened. We have actually in the last 5 or so minutes got a response from Iran's state-run Press TV saying that the Strait of Hormuz will not be reopened to enemies based on the, quote, absurd displays of the American president. Again, this is state-run IRIB reporting this, citing a statement from the IRGC Navy, the Islamic Revolutionary Guard Corps. They also said that the future of the strait is to be decided by Iran and Oman, and the state-run press cites the leaders there of that naval army, or that naval IRGC Corps. So yeah, a little bit of a pushback. You did see the market move a little bit lower initially on those headlines, but it did stabilize quite quickly, Nicole. You do still see crude oil, both Brent and WTI, lower on the day. So maybe more rhetoric to kind of push back on things here, but not enough to derail the progress that's seemingly being made behind the scenes.
Yeah, that's that.
We also have Microsoft investing over $1 billion in AI infrastructure in Thailand.
Okay, it was a decent
Apple's 50th birthday. There were some
feel
positive
good about the
comments on
answer.
Tesla pertaining to the
Feel
auto
better
side
every time
yesterday, and today we'll
about
continue
the ones
to
that just
Tesla
come to my
stories,
mind.
so watch those Mag 7
There's a lot
names.
that I
And
miss
thank
constantly
you, Alex
though.
Coffee. And
I've
folks,
seen him at
we're
least 2 or
seeing
3
some top
times, and I
10
still
ideas from
struggle
Citi,
with
Meta,
math
let's see,
all
what
the
do they
time.
say?
I overthink it.
Amerisport, Boot Barn, Citigroup,
And then there's some I
ITT,
just get
MongoDB,
lazy.
Meta, RTX,
And
Spotify, Thermo
yeah, the
Fisher,
Gimmies,
and
Dean would
Welltower.
get mad at me.
Hope you wrote those down.
Figure it out though.
Thanks
And then
for being
definitely
with me.
gonna add another segment to this app building for sure. It'll just be cool and add value. And it would just save time on explaining shit.
Schwab Bank Investor Checking.
So,
The checking
yeah,
account built
I'll look
for
forward to
investors.
setting
Named
that up tomorrow.
highest in client satisfaction by J.D. Power for 7 years in a row. With
Yeah,
Investor Checking,
I'm not
you
really
get the
gonna wing it
award-winning features of our
today,
checking
and I
account,
actually
plus
gotta look at
cash
stock
management
because
solutions, all designed for
moves
investors
need
like
to be
you,
made.
with
It's been a
unlimited
crazy day,
ATM fee
or a
rebates
crazy
for
week
cash
already
withdrawals
with
worldwide, no
options
overdraft fees, and
and the
enhanced
quarter
security features to keep your money safe.
coming
Also,
to a wrap.
because your investor checking account is
So,
linked
yeah.
to your Schwab One brokerage account,
As
you can manage your
always,
checking
finance
and
with
investing
Reezuhn,
in
move
one
with Reezuhn,
convenient
listen to
location.
Reezuhn,
Moving funds
debate with
between your
Reezuhn,
accounts
you
is
already
easy.
know.
Cash moved to your brokerage account is
Catch you
available
in,
in seconds.
catch
That
you in a
means
few
you can
if you
stop
want to see
waiting
us
and
moving.
start investing in stocks, bonds, money
Catch
market
you in
funds,
quite a
and
few
more.
if you want to
Get more
debate
with
later.
Schwab Bank Investment.